Joining us for a closer look at what's playing itself out on the market scene is Wayne McCurry from FNB Wealth and Investments. Thank you so much for your time, Wayne. Now, of course, I do have to start off with the comments that came from Fed Chair Jerome Powell as he does testify in Congress this week, seeming that his words are echoing in the right direction. Is he setting the scene for interest rate cuts here?
I sincerely hope so. Look, his speech was quite a bit more dovish than what he's given in the past. You know, he said all the right things. Inflation's coming down as expected. You know, it's the risks are not to the upside anymore. The risks are more balanced. That the high interest rates are having a negative effect on the economy, etc., etc. So I'm actually quite surprised our market's a little bit down today, because I would have normally have expected a bit more upside, especially from the mining shares based on those comments. But of course, we've got to see what the inflation number comes out. I think that's also out this week. So, you know, as I said, I'm a little surprised we have well, it's not much weakness, but that we have any weakness today.
Well, at least it's not completely lost on the markets, because we have seen slight strengthening of the rand. So maybe that's actually where we can pinpoint the kind of optimism from his dovish comments. On the other side of the spectrum, I mean, you talk about inflation, and we're still at, relatively elevated levels of inflation, although we are seeing significant softening. But in China, there too much softening. We did have in June the consumer price index coming in at 0.2%. Of course, markets had expected 0.4%, and we did have producer prices there falling 0.8% in line with expectations. Just looking particularly at the consumer prices, that's still signaling kind of soft demand from the Chinese consumer.
Definitely. I mean, China's, the economy is actually suffering maybe a lot more than what we realize. The Chinese economy is not in a good place, and it's all to do with their property sector. I mean, their property sector is massively overgeared, and now they're still trying to get over that debt mountain, I suppose. But by and large, that's cyclical. So I don't think that's a structural issue. I mean, just slightly off subject, the global government debt problems are a severely structural issue that's going to take us decades to sort out. And in fact, that might be the next crisis. But the Chinese property crisis is probably a cyclical phenomenon. But certainly, they're ready for interest rate cuts and stimulus there, given that, as you said, the PPI is actually negative, and the CPI at 0.2, I mean, that virtually doesn't exist. So yes, their economy, and I think we see that in South Africa with the demand for commodities and commodity prices generally. So the world needs lower interest rates, and after the federal speech last night, you probably find we will get lower interest rates.
Yeah, and it's actually quite interesting, because on the stock watch, for example, I've been getting a lot of people choosing Chinese stocks as saying that they're seeing that, you know, the Chinese consumer could be bottoming out here. So starting to nibble there, expecting some sort of pickup there. But of course, we'll see what happens in the next few months. Wayne, let's bring it back home and take a look at some of the company news that came out of the JSE. The Pick n Pay, after the market close yesterday, came out with a rights offer declaration announcement, basically updating us on how we got here and what they plan to do with that rights offer, but also saying that the final terms will be published tomorrow. Pick n Pay going in the right direction at this point?
Well, I would think so. I mean, I must admit, I found that announcement really weird, where they don't give you, you know, what discount they're going to offer the shares at. They might as well not have issued it, because we all knew this. I mean, it's not news. There was nothing in there that was news to the market. You know, they're going to list Boxer, they're going to pay down debt, they're going to do, but there was nothing. When I saw that headline, I thought, okay, we'll see the discount they're going to, you know, what discount they're going to issue these shares at. And yet that's only, as you said, coming out on the 11th. So I didn't quite see the need to send out that,
Yeah.
To me, it was just,
I think.
it was just, yeah.
I think we even saw with the share price quite muted, and I think it's because there was no new information there. They just told us about an announcement that they're going to make tomorrow.
Yes.
All right.
Correct.
Well, Wayne, let's get to Teresa. They released their third quarter production update there, that chrome and PGM. And it was actually quite interesting to see that they're saying that they saw a little bit of a pickup in the PGM prices. Do you think that we could start to see a turnaround there in terms of the PGM cycle or bottoming out, but also just zooming in on Teresa itself?
Look, I think so, but that's been my view now for quite a long time. It must be 9 months or so.
Yeah.
Is that I think the PGMs are bottoming out. Didn't stop the share prices falling further. But if the cycle follows previous cycles and lower interest rates lead to better economic growth worldwide, etc., etc., we should see a recovery in the platinum cycle. I mean, the platinum price has fallen, as we know, over the cycle quite significantly, but nothing like the palladium price has fallen even more than that. So hopefully we do get an up cycle. I think this is the bottom of the cycle, but that's just purely my view. I mean, I don't really know. But we should, over the next 2 or 3 years, see a commodity upcycle, which then should include the PGM complex as well.
Yeah.
I mean, if platinum maybe hasn't fallen that much, but palladium's down from 3,000 to below $1,000. So hopefully we do get an upcycle, and then Teresa will be one of the beneficiaries. Look, they also produce chrome; they're not just PGMs.
Yeah.
So they're a little bit more diversified than the big PGM players. But yeah, look, it was quite an encouraging report. But you know, the shares actually done quite well over the last 6 or 7 months. It's like well off the bottom. I mean, it's nowhere near its previous highs, but it certainly has recovered off the bottom this year so far.
Well, just before we get to the stock picks from your peers and your own stock pick, Wayne, I actually saw just a quick announcement from Astral Foods saying that Mianzo Asset Management has acquired more shares in the company, where now they own 5.16%. And I'm wondering, I mean, because we've seen Rainbow listing, you know, with investors, some investors going into the stock, and now this asset manager going into Astral Foods. Do you think that we also could be starting to see a bottoming out of the cycle, the current cycle in the chicken industry as well?
Yeah, look, the chicken industry is a funny industry. I certainly wouldn't be buying chicken shares. There's just too many factors beyond your control as management.
Yeah.
It's highly cyclical. You're subject to the illnesses. Every year there seems to be a new chickens dying from some new illness. You get dumping and you get loading with brine, and this is like low-cost airlines. This is a very difficult industry. So I don't like these primary food producers, including the fishing companies. There's just so little that management can actually control in the environment. But I mean, when you look at the share price history of Astral, then it has also picked up in the last 6 months or so, but it still looks relatively cheap.
All right. Well, Wayne, let us get to the stock picks that your peers have picked. Here we go.
Right, so my stock pick is Enter Sports. It's a shoe company, essentially, and it's based in China. I think there's a number of opportunities presenting. I think the consumer is bottoming out in China, so there's the potential to benefit from an uptick in the consumer and the Chinese economy. They're taking market share from Nike. They've got quite a good brand portfolio. One of the stars of their portfolio is actually Fila, the old brand that many of us would still remember. It is one of the best or most popular brands in China. So this is a good operator. They've pulled back about nearly 20% over the past month. And so I think it's presenting quite a cheap, attractive entry point if you're taking a sort of 2 to 3 year view. And you don't want to be involved in any geopolitical risk, because most of the earnings are still coming out of China.
So I'm going with PDD Holdings, and I'm going to have to give a lot of risks around the stock pick as well. So we don't actually hold it in our offshore portfolios. Again, it doesn't qualify because it's too speculative. We prefer Amazon, but if you don't know PDD Holdings, it's the back of Temu, and you must have seen Temu because they advertise absolutely everywhere. The Pinduoduo is their Chinese business, but in September 2022 they launched the international brand. They're now in about 50 countries. They're definitely in South Africa. I was actually playing with the app this morning for the first time and really getting a sense of it. I didn't buy anything, but it's it's the gamified shopping experience where you spin and you win a thing, and then suddenly you have to pick 8 gifts, and it seems like a lot of fun, and it seems like they're getting towards from various reports towards around 1 billion customers as well. People are saying that and this is where the risks start coming in. They're saying it's almost the size of Italy's economy.
Wow.
The problem is with Temu is it is so opaque, and that's the risk.
I'm going with a US company, Nike. Although it's listed in the US, they generate quite a bit of their sales throughout the rest of the world. They've gone through a bit of a tough period recently with earnings declining, revenue also declining, and the company is in a bit of a repositioning phase in terms of getting their product newness in check. I think they've lost some way in terms of product innovation, and some of the competitors, with the likes of Adidas on cloud, taking some market share from them. But nonetheless, it's a very strong brand with a good balance sheet, high returns on equity. And I think it might be challenging in this next few months, but they will eventually get it right.
Well, Wayne, quite interesting ones there. And I do note that you have chosen PDD Holdings as your stock picker before, of course, the Temu owner. Gary also notes some very important things there that, just how they report is quite difficult, and even there's a complex shareholding structure. But would you say that looking at the fundamentals that you're seeing right now, you're still on the same page?
I would think so. Look, it's mainly a position taken on the Chinese economy, as we've been speaking about during this program. There is tremendous upside on Chinese shares. I mean, they haven't done well for a while. So sort of PDD, I mean, Temu is their most well-known brand, but they're an online retailer, but they focus mainly on agricultural products and agricultural sector in China. Obviously, as I said, Temu is their big one outside of China. And I think I still like it, but mainly on the back of China doing better going forward.
All right. Well, another stock pick that is also betting on the Chinese consumer was Sports. And quite interesting that we have Sports, which owns Fila, and Nike as also another stock pick going into that kind of sports apparel space. What do you make of that, and also this competition between Anta and Nike?
Look, the competition's been around forever, to be honest. I mean, within China, it's not just within China. Anta is the world's largest sport equipment company by revenue. So it's a massive company. It's not the biggest manufacturer, but obviously, any consumer-related company with lower interest rates on the horizon can do well. So I would choose that. I would also support that on the back of better consumer expenditure going forward.
All right. Well, Wayne, let's get to your stock pick for today. What will that be?
I'm going back to one of the ones I had a couple of weeks ago. I'm going for Sasol, man. And I know it's a bit of a punt, so don't put all of your retirement savings into it. But this share has been so beaten. And when we do get lower interest rates, I think global chemical prices will pick up quite nicely. And obviously, Sasol's heavily geared to that. I mean, the Sasol share price hit a high of 400, literally 2 years ago, and it's down at 137. So it's almost now at levels it was during COVID and during the crisis they had, where they almost went bankrupt with the US expansion plans, etc. So, I mean, this share has been really beaten down. As I said, it is a risky one. It is a bit of one of these deep value type of shares where you either make a lot of money or the carries on falling, but that would be my pick.
All right. Well, thank you so much for your time and just giving us insight on what is currently moving investors' money today so far. That was your midday market update with FNB's Wayne McCurry.